we have discussed, the cost center accounting, internal orders, product costing, and profitability analysis, right? So, and partially the material ledger also. Now, today I'm going to, the profit center topic also as part of the course curriculum, but as you know that profit center, from CFO perspective, there is not much, but I will tell you, how the profit center derivation will happen. Probably you guys already might know about it. Okay. So earlier, profit center, if you worked in any ECC systems before ECC, right? There was a classical profit center accounting where we have to, what do you say? We have to derive some of, before this new GL and document splitting concept, right? So profit center accounting was there, but that time it was a different kind of derivation. So we cannot derive profit center we cannot update profit center for all the line items. Okay. But still we can default the profit center for one of the line items, and based, it used to generate a separate, document also for profit center accounting. That is different story. But in new GL, after new GL and document splitting, profit center will be available for each and every line item, and there is no separate document for profit. So why we need profit center? Okay, so profit center is like an internal reporting unit, like after company code, right? So within company code, basically at company code level, we will arrive with a P&L, P&L statement, balance sheet, and other, legal reporting requirements, right? So at the same time, profit center also a reporting unit under the company code. Okay, that profits. The profit center you can define at a plant level, because if you have in one company code, if you have multiple plants, each company code you can define as a profit center, right? If so that at the profit center level, you can see your financial statements. Like you can draw your P&L statement, you can draw your balance sheet, and also you can draw your cash flow statements, because profit center will collect the revenues, cost, and also the liabilities as and asset transactions as and when there is a posting to profit center. Okay, but this parameter will be used in material ledger also for other purpose, like when you are transferring goods from one plant to another plant, then in that case you if you use a profit center valuation, okay, in the material ledger with transfer pricing, some of the businesses also use profit center as a parameter for deriving, internal margins. When you transfer goods and services from one plant to another plant, generally business doesn't, recognize any revenue. But some of the businesses where they want to, for some internal purpose, reporting purpose, they want to trade between profit centers. Okay. That means when you're transferring goods from one plant to another plant, they will transfer with some margin. Okay, so that it's not typically a real margin, but for the reporting purpose, for the internal, transactions also, they add margin. They do the trade between two profit centers. Okay, that is that when you are using a material ledger with transfer pricing and profit center valuation, in that case this profit center will be used. But most of the cases it's not. Most of the cases people doesn't use it, but yeah, there are some companies who use the profit center valuation, okay, to to identify the internal margins between the profit centers. Simply, profit center is a reporting dimension within your company code, okay, to arrive the financial statements, or you have an option to. It's not a mandatory, to draw the balance sheet and P&L statement, but it's a reporting dimensions where you can have an additional features. Okay. Now, profit center, by using the, if you are using document splitting also based on the profit center, you can derive the segment and everything, right? So if you are using the segmental reporting, Yeah, in the profit center, you are going to assign segment and you can derive the segmental reporting. This profit center also you can use, as a reporting parameter in your COPA as well. Okay. But you may have a doubt. I mean, at profit center level, you can draw your P&L statement, but what is the difference between COPA and profit center accounting, right? That question may arise. Okay, because at a profit center, simply, I mean, typically forget about balance sheet items. Okay, but for the revenue, right, at a profit center level, you can get your uh, margin, I mean, net revenue or whatever it may be, because we are going to post all the expenditures, all the revenues to profit center. At the end, you will get your revenue. Then what is the difference between, or what is the additional features if you use both, or what is the additional features for both profit center accounting and COPA? Because both has its own, advantages. I mean, additional added advantages. For example, if you use profit center, as I said earlier, we can derive the balance sheet and P&L statements. But COPA is a multi-dimensional reporting, because in profit center you can analyze the revenue for the profit center only. You cannot analyze the profit center for the whole organization, right? Of course, I mean, at a group, if you create all the profit centers into one single group, you can do that. But multi-dimensional reporting not possible at profit center level. Okay, for a company code, at a profit center level, you can derive what is your revenue, what is your cost, and at the end, I mean, what is your net revenue or gross revenue, whatever it may be, you can define. Whereas COPA, we already discussed it, right? Multi-dimensional reporting is possible with the combination of different characteristics, like product group, customer group, etc. So these multi-dimensional reporting is possible in COPA. This is not possible in profit center accounting. I mean, generally, in some of the projects, if COPA is not available, then the second reporting segment, I mean, people will use their P&L statement. I mean, the profit and revenue or net revenue, they will analyze at a profit center. I mean, profit center, they use profit center accounting only. I mean, if there is no COPA. If COPA is there, then what they will do, profit center will be a characteristic at profit center, that level, they will analyze their profitability. Okay. Now, in general, for profit in the profit center accounting, right, we will not post any transactions. It's also like same COPA. Okay. Uh, where we will assign this object, I mean the profit center object, in different other objects. For example, in cost center master data, we will assign profit center. So whenever you do any posting to a particular cost center, then profit center will be updated automatically in that accounting document. Likewise, internal order also we will assign the profit center. Material master, you will assign the profit center. Okay, WBS element, you will assign the profit center. Maintenance orders, I mean, those are all like, in all other objects, profit center will be added, so that whenever there is a postings to the main object, then the profit center will be updated in the accounting document. For example, in accounting, I mean, in FI also, let's say asset accounting. In asset master, we will assign the cost center in order to post the depreciation. So whenever you do any kind of postings to that asset, and also I think I'm not sure, like, do we have a profit center field also, right, in the asset master? I think there also we can assign, or else it will be like cost center and profit center route. It it will bring the profit center to uh, FI document. Only problem, still exists, like customer and vendor line items. That means, I mean, in AP and AR line items, okay, deriving the profit center is a challenge. Okay, but uh, in normal classical PC, it was a challenge. But after implementing this new GL and document splitting, APR line items also, it's possible, because when you create, let's say, I mean, uh, during the purchase order, profit center will be derived based on what do you say? material master, right? So when you create a profit center, purchase order, there is a material. If it is a non-material, then that is a different story. But generally, let's assume you have created a purchase order with the material. So when you receive a goods receipt from the material, from the purchase order, there will be an accounting document. So it will post a profit center. At the moment when you create another document, invoice document with reference to that PO, right? That time system automatically post, bring profit center from preceding document, like your goods receipt document, and it will update the profit center in invoice document as well. That is possible only if you uses uh, what do you say, your document splitting. Otherwise it's not possible, because in the document splitting there are three kind of splittings. That is different, again a different story, that probably in your FI uh, training they will explain. We have three different kind of splits: active split, um, passive split, and one more split, I believe. One more is there, active and passive.
One more is zero balance.
Yeah, zero balance split. Yeah, you're right. So this is like the passive split is like active split is based on certain rules, right? Which are there in the when we are doing the document splitting configuration, we will define the rules. Okay, we will create the variants and we will assign the variant to GL account, and that variant, there is a document splitting rule will be there. Based on that rule, system will derive the profit center and will update. Passive split means already, subsequent documents. Okay, already some document might have posted, so based on the preceding document it will derive uh, the profit center, especially that this kind of document, the invoices and the forex revaluations, these kind of documents. And also there is a zero balance split. Okay, if system is not able to, when you are activating the profit center as a you know what do you say, mandatory field in your document splitting configuration, if the balances are not zero at a particular profit center level, then it will create additional line items for each profit center in order to match the balances at profit center level. Okay, yeah, you can have this kind of splits, but this is all possible because of the document splitting concept, which is available since ECC was introduced. Okay, and the table structures also got changed. When compared to classic and new GL, right? So earlier, all postings, we used to create one dummy profit center and ITA library. So there was an ITA library to call it as. Uh, there are a separate set of tables. Those tables are basically for within CO. Okay, but now uh, those tables are no more available in new GL and document splitting. Now all the tables are like start with FAGL. Okay, so all your profit center related information, it will start in start with FAGL. Okay, so in S4, when coming to profit center accounting, there is no change. Typically, what we have what functionalities we are using since ECC and the new GL document splitting concept, there is no further advanced, what do you say, enhancements or any new additional features in S4 HANA also. What we are using in document splitting, I believe, we are using the same. There is no change. Okay, and it is now, completely handling in FI. You guys might already aware, but yeah, it's completely handled in FI. But still, uh, there is a common alignment between CO and FI people, because if they use profit center as a reporting dimension in COPA, again we need to align with finance team, or else it's again a debatable question, like who will own it. Because if CO owns it, then FI team has to support uh, the document splitting configurations and everything, right? If FI owns it completely, then it's a different story. Then in CO, basically, uh, we will take that reporting dimension as a COPA, but we need to understand. I mean, what are all the items they need to bring the profit center, especially for vendor and these line items, right? Customer line items, especially if the material master is not in place, then what kind of rules you are going to follow? Those all things we need to take into consideration. Uh, we have substitutions and validations, right? But we can also create some kind of substitutions to make profit center as a default profit center. But that is, it's not a good idea to use substitution. But yeah, if it is really necessary, then we have to use substitution, because substitution will impact your document splitting configuration, because substitution has the highest priority than your document splitting. So that is also another problem if you have multiple profit centers and the substitution activated in a particular plant or some other thing, but it will ignore your document splitting configuration, and it will bring the profit center from your substitution rules. So we should be very careful by defining all these things. Yeah. But after implementing document splitting and new GL, 95% of the cases we will have the profit center. But still, there are cases where we will not get profit center into the vendor line items. If, as I said earlier, if the PO is created without a material, it's like a text material. In that case, you have to do something like you have to default the profit center in Faggle 3KH, or else you have to write the substitution. But while you are writing substitution, we should be very careful, because if you activate, let's say, if you activate substitution at a plant level, it will simply ignore your, as and when you create a normal PO also, it will update default profit center from the substitution during, if the profit center is not derived, at least, it will update all the line items the same profit center. Okay. Yeah. Now let's see some of the configuration which we need to do as part of profit center accounting. Let's say SPRO, financial accounting. Now, no need to create, uh, we should not create standard hierarchy and everything from the controlling node, because it's already available in FI. So from the FI node itself, we can create, and we should not create dummy profit center. Okay. If you create dummy profit center, in the sense, from the CO node, there is a separate transaction, create dummy profit center. Okay. That profit center I'm talking about. But you can still create a common profit center, and you can name it as dummy, but it's not the real dummy profit center. Okay. When you're using profit center accounting, generally people will create one common profit center. If system is not able to, in some of the cases where they will default the profit center with some profit center like 9999, right? If they're not able to post anything to one particular profit center, then simply they will add one profit center. That is the common profit center. Thereafter, they can do allocations and everything to other profit centers. Okay. So general ledger accounting, master data, profit center. Reactivate profit center accounting in controlling area. Okay. IN10. You just activate it. Yeah. Define from profit center hierarchy in standard. Just, here we need to give some name to hierarchy. For example, ours is IN10. Name it IN10 here also. Now we have to create that hierarchy. Define standard hierarchy. Why it's coming by default? Okay. So define standard hierarchy. Okay, so already we have assigned the profit center hierarchy to the controlling area, so it's coming default. Just name it PC hierarchy. I mean, generally it will be like the organization name. Okay. Okay, that's it. I mean, this is the basic configuration. We need it as part of profit center accounting. There is no other configuration as such, but we have to assign our profits, assign profit center to PP orders, assign process orders, all cost objects we need to assign, the profit center. But before assigning that, we need to create a profit center. And also, if you, for the reporting or some other purpose, you can create some kind of profit centers, groups also. Now let's create one profit center. Accounting, financial accounting. So K51 is the transaction. Let's say profit center IN 100. Okay. Group you can create the main standard hierarchy you can create. That hierarchy you can assign here. After that, you just activate it. Okay, the profit center has been created. Now let's go to change mode. So here, see, when you are using, I mean, if you are using one controlling area and multiple company codes, at the moment you create the profit center, it will be assigned to all the, I mean, by default, it will be assigned to all the company codes. Okay. In that case, what you have to do, you have to uncheck wherever it's not necessary, because I mean, the profit center, they may use the same profit center in all other company codes, then it's fine. But if they are using company code specific profit centers, then we have to we should make sure that here we have to, this assignment we need to take care. Okay. So if it's not relevant for that particular company code, then you have to remove this checkbox. Okay. And you have to assign the profit center to relevant company codes. Especially this problem we will get when you are using one, what do you say, one controlling area with multiple company codes. Okay. There is no other changes. Yeah, that's it. Now we can assign the profit center to cost center. Let's go to cost center master data. I don't know whether it will allow it or not. Let's see. Profit center not exist in 1/1/2020. Okay. Let's see. KE52. Validity period. Let's exchange. Activate. Profit center is active, right? Its status is active only. Wait. Let me try to create a new cost center, and let's see whether it is allowing or not. KS01 EN10 HR. Yeah, it is allowing for the new profit center, but for the existing one, it's not allowing. I think we have deactivated the profit center, document splitting also. Let's activate that as well. We will see. General ledger, business transactions, document splitting. Activate document splitting. The company codes without project assignment already. See, this is an additional, very sensitive thing. Like once we deactivate, once the company code is productive and activating, deactivating, uh, document splitting is it's very difficult. Right, that subsequent implementation of document splitting one, you have to do it. Then you have to create it as a separate project and you have to activate it. Okay. So that's what it is expecting. Let's see. Sorry. Okay. Classify GL accounts for document splitting. Sort of accounts I enter. New entries. Accounts. This file account to all 5 series accounts. What I will do. Yeah, these variants I'm using the existing one. Expense accounts, I will take it. Gas 1299. Take it as balance sheet item. Okay, so I have assigned all the expenditure because when you are using document splitting, we have to classify our accounts, whether that account is uh, which kind of uh, variant we need to select, like whether it expense, balance sheet, or revenue. You can create your own variants, right? Categories, or you can use the already existing categories. Okay, but again, if you're creating the categories again, that category needs to assign the rules and everything. So that extent, I don't want to do all the configurations, but yeah, let's see. Check item categories. So these many item categories are assigned to our company code by default, so we can use it. This is also not required, I think. These are all what all the documents types are available, and whether that document type is assigned to that variant or not. This variant also you can create if you want. You can create your own variant. Define document splitting cards general. This is important step. Yeah, here you have basically these two things are important. For example, whether you are going to use segment reporting, here if you see here, zero balance ledger is activated. This is client specific setup. Okay, another one is like profit center and segment is mandatory. If you select these fields, then each and every line item you should have the profit center enter. Otherwise, it will give you an error message. Okay, and also like uh, in the document, the profit center balance has to match. Otherwise, I mean, since the zero balance split is also active, then it will throw an error message. When you activate this zero balance split means you have to maintain some accounts also for the zero balance split. Okay, now let's try to, because I mean the document splitting is in place, let's try to post some expenditure and we will see. Yeah, B50. Let's give the HR cost center IN10. Account determination for 00. Yeah, the document is posted. Let's display the document. So if you see here in the main document, the profit center is updated because I mean we have assigned the profit center in the cost center. So it has taken the profit center from the cost center. So if you go to the line item general ledger report, you have cost center. I mean uh, profit center in both the line items. But here I really didn't understand why this profit center. I mean this document is created because if you have multiple profit center, then there is a point to uh, get these two line items because already the balance is matched at this profit center level, but additionally these two lines got added, but this is not the right way of posting, I would say, because something, I mean, we missed in the document splitting or somewhere. But I typically, I mean, when you are using document splitting, if the the balance is matched at profit center level, because we have debit and credit with the same profit center, okay, then there is no point to create, I mean, these additional two lines. Okay, if it doesn't, I mean, let's say you have posted like one expenditure, like the debit is one profit center and credit is to another profit center, then it will make sense to create the additional, I mean, zero balance clearing ledger to match the profit center, both the profit centers. Okay, but in this case it's not required. I think there is separate setup also to eliminate these two lines. This is required only if the profit center is not tallied with the profit center level. I mean, the balance are not tallied with the profit center level. That time only it will be created additional lines. Otherwise, it's not required. It's not giving any value add, right? I mean, it's just added two lines, simply created two additional lines. Yeah, it will make sense when there is a balance is not matched. For example, let's say salaries, you have profit center IN 100, and you have one more expenditure like uh, rent profit center IN 200. Then you have cash. Like in that case, system what it does, I mean, it has to split the lines into multiple lines. I mean, like IN 100 and IN 200 at the end, I mean, it has to match. In that case only, it has to create additional lines for the zero balance split. Otherwise, it's not required. Okay, that's how, I mean, typically, I mean, you just focus on these two lines. So the profit center will be updated each and every line. For this line, we have entered the, I mean, system has taken the cost center, profit center from the cost center. But the second line, it has taken the profit center, because this is the feature of document splitting. It will read the, I mean, profit center from the another document, and it will update to all the line items in the accounting document. Okay. Yeah. So to derive this profit center, there are, like, this is through the document splitting rules you can derive. And also if you want to default some of the profit centers, okay, for some of the GL accounts, probably you can assign here FAGL 3KEH. So here, I mean, for the accounts, I mean, for what are all the accounts you want to default profit center, you can define. But if you define it, it will hamper your document splitting again. So you should be very careful while assigning any profit center here. Okay. And another thing is you can use substitution rule also to derive the profit center. Okay, based on certain rules like company code or profit center or some other parameters. Using the parameters, you can also derive the profit center. Okay, and then is in S4 HANA, I told you, right? I mean, if you want to transfer balances from one profit center to another profit center, okay, you can use the universal allocation, profit center allocation. You can use it. That is available in ECC also, but the only thing is in the app. I mean, without app, earlier they used to create allocation cycle, profit center allocation cycles in FI. But yeah, same by using the Fury app, also you can create the allocation cycle to transfer the cost from one profit center to another profit center. But that is, I mean, very rare case. If you are using document splitting with zero balance clearing, ideally, I mean, it's not required to do the allocation cycles and all. But yeah, if at all, I mean, if you feel something needs to be transferred, then you can still create an allocation cycle, and you can transfer the balances from one profit center to another profit center. Okay. So yeah, that's it from the profit center accounting. Likewise, I mean, we have material master and asset, internal order, all other parameters. It will profit center will be derived and it will be updated in the accounting documents. Okay, but we should make sure that right profit center is assigned to material master and all other objects. Okay, now we will go to the material ledger. Okay, yeah. So when I say material ledger, okay, it has two main functionalities. One is material ledger and another one is actual costing. Okay, so why we need material ledger? Okay, so material ledger will give you to value your inventory in different currencies and different valuations. For example, in FI, let's say, I mean, any goods movement is posted. Okay, we can see the balances in document currency, I mean, company code currency. If you are using a group currency also, you can see the group currency in FI balances. I mean, FI books, we can still see your company code, but that we need to activate, right? I mean, the group currency, company code currency, we need to activate. If you activate that material ledger, your inventory valuation from the material management perspective also, we can see your inventories in different currencies and different valuations. For example, company code currency and group currency, group valuation. When I say group valuation, uh, the currency might be same, okay, in the group valuation. Let's say, I mean, we are using your USD as a company code currency and also group currency, but there is another parameter called group valuation. Okay, in the group valuation, what happens? They can valuate the same material using group valuation. They can valuate same material with a different, what do you say, valuation. Like in group valuation, I mean, normal legal valuation, the currency, I mean, the cost of the product is 100 USD, but in group valuation, that could be 90 only, because in the company code valuation, they have added some kind of additional, margin or something to transfer the stock from one company code to another company code. Whereas when it comes to group valuation, they thought that, okay, this additional 10 euros is margin also added. So that's what they will eliminate, that additional 10 in the company code, group valuation. Okay. Or else, I mean, you can use a different place. Let's say, I mean, in company code legal valuation, you can use different kind of parameters, like, because for the group valuation, we need a separate costing variant. Okay. In legal valuation, we need one costing variant, and group valuation, we need one costing variant. In the group valuation, you can use different parameters, like, in the group legal valuation, for the material valuation, you use, let's say, info record. But in the group valuation, you are using a different parameters to evaluating the cost of the material. So, but the group valuation is needed, if you want to have a different view at a company code level and different valuation view for the group level. That means, I mean, this will be useful. I mean, the group valuation will be useful when you are transferring goods from one company code to another company code, and you want to, okay, eliminate your intercompany margins and all. In that case, you need a group valuation. Otherwise, I mean, group valuation is not required. I mean, group valuation is only needed when you are transferring goods and services from one company code to another company code, and you want to eliminate your intercompany margins. Okay. Initially, also we discussed the same thing. For that, we need transfer pricing. Okay. So SAP Material Ledger automatically eliminates the intercompany margins when you are using transfer pricing and with group valuation. But in our system, we have not activated the group valuation because of some additional setups. I mean, the currency types are not available. So let me go to the material ledger configuration. So as I said, material ledger head has two parts. One is material ledger and another one is actual costing. So the material ledger part only takes care of inventory valuation in different currencies and also in different valuations. When I say different valuations, it has uh, group valuation and also it has profit center valuation. Okay, the difference between group valuation is like, group valuation and profit center valuation is like, if you want to eliminate, if you want to, monitor your intercompany margins, then group valuation is sufficient. But if you want to track margins at a profit center level also, in that case, you need profit center valuation as well. Okay. So that is the difference between. So that is the difference. So material ledger is only to evaluate your inventory valuation either in different currencies or different valuations. And another component is called actual costing. Okay. What actual costing is it does? So actual costing will be useful if you want to inventorize your purchase or production price variances. Okay. So because of the, during the purchase order, your raw material price is 100, but when you're procuring it, your original raw material price is 100 euros, but when you're procuring, there could be a chance of purchase price variance. Okay. Or exchange, because of exchange rate differences, there could be some price changes. These variances you can adjust to your inventory. Okay, at the month end, we will run the material ledger closing. So when you run your material ledger closing, the inventory will be revaluated, okay, with the new price. That is actual costing. So actual costing will be used to inventorize your purchase or production variances. Okay, that is actual costing functionality. So actual costing is optional. If you want to use it, you can use it or you can simply ignore it. But material ledger is mandatory. In S4 HANA, by default, you have to activate material ledger. Otherwise, you cannot create any material in the system because material ledger is, SAP made it as mandatory so that, whether you use the full functionality of material ledger, you use it or not use it, but by default, you have to activate it. Okay. But actual costing still, you cannot, you can, it's your choice whether you want to use actual costing or not. It's your choice. Because we already discussed, if you want to use actual costing, then the price determination you have to use 3. If you want to if you don't want to use actual costing, and the price determination will be 2. So if you create price, if you assign price determination as 2 in the material master, that means you are not going to use actual costing. If you if you assign 3, then you are going to use actual costing. Okay. So material ledger has 2 parts. One is material ledger and another one is actual costing. So when I say material ledger, it will be used to evaluate your inventory in different currencies and different valuations. Okay. We have 2 kind of valuations are available. Like legal valuation, anyway, it's standard. Apart from that, you can have group valuation and also profit center valuation. Okay. Currencies also, you can have group currency, company code currency, and also in some of the countries they use odd currency, right? Like 40. Hard currency also you can use in the material ledger. But at any point of time, you can have 3 like 1 currency, 2 valuations, or maybe 2 currencies, 1 valuation. Maximum 3 only possible in the material master. I already told, like company code currency, group currency, and group valuation, or else company code currency, group valuation, profit center valuation. Okay, 2 valuations and 1 currency, 2 currencies or 1 valuation. Like, so maximum is 3 possible. But if in whether it is S4 or ECC, the maximum you can use 3 currencies in material ledger. But in future, if SAP comes up with that universal parallel accounting, in that case, SAP can have 10 currencies. How many currencies you are going to use in FI? Like in FI, if you use 10 currencies, in the material ledger also we can use 10 currencies. That means in the material ledger you will have 10 tabs with each currency. So FI and ML is synchronized. What are the currencies we use in FI? The same will be available in the material ledger also. But that is the near future which is going to come if SAP is fully implementing that universal parallel accounting. That is still It's an ongoing process. But as of now, I mean, the currency wise, there is no change. If you use in ECC or S4, if you, I mean, only we can use maximum 3 currencies in material ledger. Those 3 currencies, again, it has to be as per your Fins ledger setup. I mean, in Fins ledger, once you define the currencies in material ledger, the same currencies has to be available in Fins ledger. Additionally, in FI, you can have more currencies, but in CO, you can have maximum of 3 currencies. Okay. Let's go to material ledger configuration, product costing, actual costing material ledger, assign currency type to material ledger. Earlier, I mean, we have done this setup already. For example, IN10. Okay, I told, I mean, we used only 2 currencies, company code 10 and 30. Company code 10 is group currency, 30, sorry, 10 is company code currency, 30 is group currency. Okay. And again, we have to assign this material ledger type to all our plants. Okay, we have one plant IN10. So we have assigned already this. Activate material ledger. So this also we have done. So I told you, right? I mean, activate here the price determination 3. If you see here, price determination 2 and 3 are available. 2 is transaction based, 3 is single and multi-level. That means if you use 2, you cannot use actual costing. If you use 3, then you can use actual costing. Okay. 3, generally, I mean, let's say if you're not going to use actual costing, then what they will do, simply they will activate the material ledger and they will assign 2 here, so that they'll not, I mean, it's not applicable for actual costing. We are using the actual costing. Next one is set up actual costing. Activate actual costing. Yeah, this one, activate actual costing. So we have activated the actual costing as well. Next one, activate actual cost component split. This also we have done. IN10, we have activated the actual cost component split also. So this is the material ledger setup. Okay, which is required to use both material ledger and actual costing. Now let's go to our material MM03 FC100. So as I said, I mean, considering our current setup, like company code currency, group currency, the inventory valuation is showing, I mean, we have stand price in both the currencies. Okay. And also the inventory value in both the currencies. Okay. Let's go to material price analysis. So if you see here, we have posted 2 goods movements for this production order. Okay. So it posted here, and variance also got settled here. I mean, there is some variance 145. When you run your material ledger closing, this 145 will be, now the stock is where, I mean, we have stock of 5 quantity, right? This, now the value is, inventory value is how much here? 18,000, right? 18,793. But this is the original value which we are having. But 145 variants also there. Or let me go here. M03. Accounting. So your inventory value is 18,793, but variance is also there 145. Okay, this variance will be adjusted to inventory. Okay, and your total inventory value will become 1890, 18938. Okay, so if you go to your inventory, for example, inventory report, MMBE, five quantity, it's only quantity, MB51. Yeah. Yeah, if you see here, the total value is like 18,793, the inventory value. But once you execute the material ledger, what system does, it will inventorize this 145. This 145 variants, production variants we got because of the production manufacturing. This 145 will be adjusted to this 799. That means the total stock is available. This will be adjusted to here. It will post an accounting document and it will adjusted to here. Now the configuration point of view, everything is okay, but now at the month end, we need to run the material ledger closing. But in order to close the material ledger, first we have to close the period 6. Okay, then only we can run material ledger closing. For example, for material ledger closing, we have a transaction called CKML CP. In ECC also, we use the same transaction code. Okay, costing run, for example, IN10, June, let's say June costing run, IN10, June. So period you have to enter here 06/2024, create. So it's asking whether it is actual costing run, AVR or something. It is actual costing run. You have to select our plant. This is our plant. Select here, save. So here there is a change. In ECC, if you open your CKMLCP transaction, okay, CKMLCP, this is the material ledger closing cockpit transaction. Okay, at the month end you have to run. In order to run the CKMLCP for June, you have to close the June period. Then only it will allow. Let's say, because we will generally, when you will run your material ledger, once all your FI books, like when I say FI books, all your AP ledger and AR ledger, once you close all those things, then only as a last step, we have to close the material ledger, because once we close the material ledger, right, they cannot post any goods movements in the period. Okay. So that's what material ledger step is the material ledger closing cockpit is the last month and step in the CO. Okay. What is the difference between ECC and S4 now? In S4, we have simplified, we have only 5 steps here. One is selection, preparation, settlement, post-closing, and mark prices. Okay. But in ECC, we have some seven steps, I believe. Additional 5 steps are there. like single level price determination, multi-level price determination, settlement post-closing. Those are now not available, the single and multi-level price determinations. Everything is included in the settlement step itself. Okay. So what is single level and multi-level price determination? For example, you have a raw material, right? You have procured a raw material. Okay, single level. What do you mean by single level and multi-level price determination? Okay, single level means, let's say we have a raw material. Okay, like wheels, right? 4 wheels we are talking about. So let's go to raw material RM100. So we have initial stock upload this much. Yeah, in the consumption, because this raw material we have consumed in FZ100. Okay, how many quantities we have consumed? This is reversed, but yeah, some 20 quantity we consumed in the finished product. If there are any variances, what happens? What is our total stock? Okay, here total stock is 230 quantity. Okay, this 230 quantity, let's say, let me put 1 second. I mean, this has so many things. Let me go here. RM200. Do you have something? Okay, we will take some RM only. Okay, now RM100, initially we have 250 quantity of raw material. Out of that, we have consumed 20 quantity. Okay, here variances, we don't have any variance. Okay, let's assume, I mean, let me post some variance to this one. I mean, as of now, I mean, we don't have any variance, but I will try to generate some kind of variance by using MR22 transaction. There is a transaction called MR22. Okay, let's assume we have some variance, and that variance basically we will get it from purchase order. Okay, but here I would like to let's assume here my how much it's my stock is showing. One material cost is like how much it is, 5,000, right? I mean, price is 100. Actual cost is like assume 120 of for this material. RM100. I will enter amount as I think there is some determination issue. Account determination. UMB we need. Okay. UMB. We need one GL account. I mean, for the revaluation actually. Gain or loss from revaluation. Yeah. FS00. This we will create as non-operating expense or income, gain or loss. Now go to OBYC, UMB, debit credit. Valuation class, otherwise posting keys. What is this? Okay, valuation class 3000 UMB. What is the account? This one, right? Okay, so go here, MR22. Both the currencies you have to enter the amount. This transaction, I mean, in ML, basically we use it for what do you say? To post any, let's say, I mean, there are some adjustments we have to, when you are using material ledger, you have to use this transaction MR22 to post any kind of adjustments to the material ledger. So item category, this is document splitting issue. SPRO, not controlling, financial accounting, business transaction, document splitting, classify. This, let's make it MR22. Okay, we have posted the document. Now go to RM, where it is RM, refresh. So now if you see here, the price difference just now we have posted, right? 2000 USD. Okay. So the original inventory value is 23,000. We got an adjustment. Let's say we have a price difference of 2000. So total is like 25,000. Okay. The inventory valuation. But here this 2000, what happened? I mean, this 2000 belongs to 250 quantities. Okay. Out of this 2000, okay, it has to adjust to all 25 quantities. Okay. Then what happens? I mean, your total inventory value, you're expecting this 25,000, but this out of this 2000, 20 quantity already we consumed in the next level, right? In the consumption, if you go to consumption, we have consumed in the production next level. Okay. So some portion has to, I mean, this 2000 divided by 250. Okay. Let's assume how much? into 20. So 160 USD, okay, 160 USD has to go to, I mean, 160 belongs to these consumed materials, correct? And remaining other all amount, I mean, is belongs to this 230 quantities. In this case, what happens? System, what it does, your 160 minus 2000, right? So 1840. In this case, what system will observe? So let's assume it derived 2000 as the variance. Out of this 2000, system will identify, okay, now I have only 230 quantity. Okay, 180, 180, 180, 60, sorry, 10840. 10840 will be adjusted to these two quantity, I mean 230 quantities. Okay, this is single level price determination and multi-level price determination. Now remaining 40, right? I mean remaining 20 quantities are there. What it does, it will go and search where we have used those 20 materials. Okay, I have used in production order so and so for the material so and so. Then system will identify that. Then it will adjust that 160 against this material because we have already consumed this raw material in this material in the finished product. Okay, then it will identify that 160 and will update, it will identify the consumption account and it will go and reevaluate the consumption also. Okay, we have consumed the raw material with some price, and again additionally 160 has to come from the below materials. So we have used in this production. So here consumption is there. Here also it will adjust that 160. This is multi-level because these materials are already consumed in a different level. Are you getting my point? So one is like it will identify the price variance and it will see the available inventory quantity. It will adjust to that quantity. That is single level. And the multi-level is where we have used the remaining quantity. I mean, where we consumed during the month additional quantity. I mean, the consumer for the consumed quantity also, it will adjust the price. Meaning these 20 quantities are already consumed in further process. It will go to the further process and it will adjust the variance to the further process also. Right? It is clearly tracking. In the consumption, it's showing FZ100. If you go to the FZ100 also, it will show you. Oh, sorry. CKM3 is the transaction for the material price analysis. FZ100. In the FZ100 production, sorry, in the raw material itself, where it is consumed, it will show you. But at the end, I mean, this will be adjusted to here. I mean, once you run your material ledger in the receipts column, it will add one more line item like, price variances from lower level material. It will add one more column here and it will update here also once we execute the material ledger. Okay, that is the difference between single level and multi-level. Single level is like it will identify the variances and will update to the available inventory. With the multi-level, it also identify the next levels. Is it clear to everyone? I mean, it's a bit complicated, but yeah, slowly you will understand. I mean, once we have some example in the system. Okay, let's now go to the material ledger cockpit where we have. Okay, so that single level and multi-level, earlier we used to have two steps in the ECC system. If you go to ECC system, you have separate step for single level and multi-level. Now SAP has removed all those steps and everything is in one step, like single level and multi-level will be done in settlement itself. Okay, now go to the selection. Remove background, remove save log. Save log, let's keep it, save it. Let's execute now. In this step, what system does, it will identify all the raw materials which are available in the plant. So we have 6 raw materials. right? It has identified 6 raw materials. Next step, unlock it. So process again, remove this one. Here, if you want to run the material ledger for specific material or specific plant, you can add here, but I would like to run it for each and every material. So I'm not giving anything here. Now, second step also, preparation happen for 6 materials. Now let's do the third step, settlement. Here you will get the problem. Just execute. Okay, this step is also happen, but only thing is like post closing, it will stop you. But what happened, I will tell you. I mean, after settlement, let's go to the material price analysis. Where is my price analysis? Refresh. Now you see, we have price difference of 2000 in this material, correct? Okay. Now out of that, it transferred. I mean, this is not, it's not, it has not posted any accounting document so far. Okay, system just executed the ML closing cockpit, and it has identified the variances. We have variance of 2000. Okay, now 2000 as a total variance. If you see here, system has identified the ending inventory 230 for 1840 and consumption 160. Okay, so this is what it's going to happen. I mean, system has calculated the total price variance, and it is divided into 2 buckets. One is ending inventory, another one is consumption. So your original ending inventory is like 23,000. Now we are getting variance from this raw material like 1840. So your total inventory value will become 24,840. And consumption, you have already consumed 2 quantity. That 160 will be adjusted to the next level. If you see here, okay, this is going to adjust to the this FZ against this FZ. So single level and multi level are happening in the same place. I mean, when you run the settlement step, both the things are happening at the same level. So at this point of time, there is no accounting document or something. System simply calculate the variances, and it will adjust to different, you know, materials. Okay, in the reports. Okay, it will not generate or post any accounting document so far. Okay, now go to the other material. What happens there? CKM3. See, earlier these lines are not available, correct? Only we have these ones. Now, these all material we have used in the production for this producing. I mean, to producing this FZ, we have used RM 100, 200, 100. I mean, this SFG 100, 300, and 400. So, if there are any variances from the lower level, then those variances will come and sit in this material. For example, we have 160 USD from the lower level RM 100. We got that 160, and it is here in the variance it is sitting, and this variance will be adjusted to raw material, I mean wheels, because it's a raw material cost, right? It's came and sit in the raw material cost. Okay. If the variances are also from other materials, those materials variance also, it will come and sit here. Okay. And also we have that 145, right? Variance. This is also going to the actual value. It will adjust. Then your total value will become 19,089. Clear? So your price variance is typically your, you know, variances from the lower level and also from the your current production, I mean production order. This 145 and this 160 will get adjusted and your total inventories will become, I mean, 19. But if you run the report again, I mean, as I said earlier, the accounting document is not yet posted. Okay, it is just system calculated the variances. Close this report. If you go here, still it is showing 18 only, 18,793. That means this, oh, with this one, 18,793. It's showing the preliminary valuation still. It's not, I mean, bringing the price differences. So the price differences, total price differences is like 305, 160 from the lower level and 145 from the material itself. Okay, this 305 is now going to post to this 5 quantity. Okay, again, out of this 5 quantity, let's assume 1 quantity is sold and 4 only remaining. Again, this 160, 145 also will be splitted between this 1 and 4. Okay, that is multi-level. So it, how many levels till the material is consumed or it will delivered to the customer till the end, I mean, it will be adjusted till the end process. Okay, now go here. This step, I mean, we cannot perform. If you go here, okay, so execute, reevaluate material, reevaluate consumption, set account assignment. So if you want to post accounting document, you have to, you know, select all these parameters, because reevaluate material, you want to reevaluate your material, reevaluate consumption, okay, and also set account assignment. So if you select all these things, then only it will post an accounting document. Otherwise, it will not post any accounting document. Remove background, remove test run. See, some of the businesses, what they will do, just they will identify the variances, okay, and they will ignore simply. Okay, this is what, I mean, I am going to get my actual cost of the product. Okay, they will not book any accounting document. Just for their reporting purpose, uh, they will identify the variances and they will not perform this step. Post closing step, they will not perform, so that system will not generate any accounting documents. Okay, they will simply ignore. Just they will identify the raw material. Okay, this is the final product value. We are getting this, the actual value. So just they will prepare some report or something. They can compare what is the stand price, what is the actual price of the material master. Okay, likewise. Otherwise, I mean, if you want to update, I mean, inventorize the variances to the to adjust the inventory valuation, then you have to select this one, remove test, save it, execute. You are not allowed to execute closing entries in period 06/2024, because to post the inventories, we have to close the period 6. Let's try to close the period 6. That means MM period we have to close. MMRV. Current period is 6. Now go to MMPV. 20 and 10. If it is allows, it's good, but let's see. Errors occurred. Transaction. Yeah, it's not allowing because I mean we are just middle of the month, right? Yeah, I think I mean because we are in period, I mean just 10, right? I think it will not allow to open the new period. Okay, so we can now, if you want to run the ML closing, I mean if you want to see this accounting treatment, right? I mean we have to close this period. Unless we close the period, 6th period, we cannot book this accounting document. So in this case, what happen? System will generate an accounting document. Okay, what it does? Let's say in the raw material case. So it will post an accounting document like debit inventory and credit revaluation of inventory. That accounting document it will post and it will adjust your inventory books also. That 1840, right? One inventory accounting, one inventory posting it will post. Another one, the consumption also it will post. I mean, that means it has to adjust the already consumption postings, right? That also it will post an accounting document. So in order to check this, we need to close period 6, but unfortunately we cannot, do this. But if you want to run this for May month, we don't have any bookings in the May. Okay, the variances will be adjusted. I mean, it will be calculated. Okay, and it will be adjusted to the next level. Okay, and this price will become your PUP. I mean, periodic unit price, what we are calling, right? In the purpose of material ledger is like to calculate the actual cost or PUP. That is your PUP. For example, if you go to here, if you see here, the standard price is 7583. Sorry, 3758.63. The periodic unit price, this is 3819. Okay, that means this divided by the total quantity, right? I mean, it's with your, what do you say, um, price variances. It's inclusive of your price variances. So this will become your actual price for the closed period. I mean, the stock of the raw material will be revalued with this price, and this is your new actual price in the previous period. In the current month, again, you will have the same standard price, or else if you calculate new price, it will get changed. But this is your new price. I mean, the actual price for your period June. Okay, for example, go to raw material also. Where is raw material? This is the raw material, right? If you go here, so earlier it is 100. Now the actual price is 108. I told you, right? I mean, uh, 2000 divided by 250, that is 8 euros is the price difference, and this 8 will be adjusted to each and every material. So 8 is adjusted. So your material price is 108 euro USD in the closed month. Okay. So the inventory effect also it will be happen once we do the last step. MM03 accounting one. See, this is your standard price. This is your periodic unit price. Okay. Once we complete the settlement step, right, the periodic unit price will be calculated. This is 23,000 is your standard value, but periodic unit price this one. I mean, with your actual value this one. Once you do your postings, your inventory value also will become with this value. Okay. So let's assume business doesn't want to post the inventory valuation. Okay. If they want to just compare the prices, so still, I mean, they can compare everything. I mean, the data is available in the tables, material ledger tables. They can compare. Okay, with the standard price, my inventory valuation is this much. With the actual price, actual costing, this is the inventory valuation. Okay, and this price they can also use it for next month as a standard price. Next month in the sense subsequent month. Let's say now we are in the month of June, right? We will do the actually in July 1st, I mean 1, 2, 3. Before 3rd June, we will do the closing for June month. Then we will arrive the price. Okay. That price, I mean this 108, we can use it as a standard price for August month. Because in the July already the price, I mean, we have started the month and closing. I mean, we have started the goods movement by that time with the old price, right? Generally, people doesn't change that price. Probably they'll use it this price for the August month, subsequent month as a standard price, so that I mean they will get their actual valuation. I mean the material valuation with the closed one, or else I mean they will go with the standard price for the whole year, but keep on they will adjusting their inventory valuation each and every month. Okay, but this is how I mean the what do you say the ML closing will arrive the standard price of the periodic unit price, and it will be updated in the material master. Okay, and during the post closing step, it will post an accounting document with inventory adjustments and everything. You can also see the cost component split. This is standard price 100, periodic unit price 108. Okay, this is the actual cost component split. For the FG also you can see. This is periodic unit price. So standard price is 3758, periodic unit price 3819. This is the actual cost component we are calling.